Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Dalal Street looks set for a cautious start ahead of TCS earnings today. Nifty futures on the SGX indicate a flattish start for Indian equities. Wall Street stocks ended mixed, losing steam late in the session. Asian shares trade lower ahead of the CPI data on Wednesday. The US inflation data is expected to determine the Federal Reserve's path forward in tightening cycle. FIIs, the trend has been holding up. They've been buying. They've bought shares worth around 342 odd crore. DIIs have sold shares worth around 264 crore on April 11th. TCS, the company is expected to report subdued growth due to client delays in the US and Europe. So do keep an eye out on a bunch of IT names. And another big development, IMF has slashed India FY24 GDP growth forecast by 20 basis points to 5.9%. But with that, let us get going and discuss some stocks and strategies today with Rajesh Palviya, the head technical research at Axis Direct. Good morning there.
Good morning, Nickey.
Well, it's a crucial day. Bulls have retained their control over Dalal Street for the last 7th consecutive session, taking the Nifty above that 17,700 mark. Rajesh, do you think there is a hidden bearish divergence out there? And what's the strategy that you will suggest to our traders and the viewers out there on a day like this?
So it's a third consecutive week where we are seeing that Nifty is making higher high formation, and it has returned back to the comfort zone for the bull case for the market, as Nifty as well as both the indices are now trading about 20-day, 50-day moving average. So which clearly adding up some confidence is coming back to the street. And even if you look at the overall sectorial behavior in recent past, most of the sectors which were in oversold trajectory now started recovering, and most of the large cap as well as mid cap stocks also started showing some buying interest from their recent low. So looking at the overall market breadth as well as the development on the sectorial indices, which clearly indicates that this momentum is likely to continue further on the higher side. As we are observing the derivative data also, that it's clearly showing that short covering is taking place for Nifty also. In the previous session also, we have seen the significant short covering action, and Nifty is comfortably holding this 17,500, 550 zone. So we believe that if any minor dip comes in the market in the near term is a buying opportunity till we are holding 17,500, 550 zone. So buy on dip should be the strategy, and we are projecting target of 17,850 in the continuation of this trend which we are seeing since last 3 weeks. So to initiate this up move, to play this up move, one can initiate long in 17,700 call option, which was closed at around 70 rupees in the previous trading session. Keep stop loss of 45 rupees and upside target we are projecting 120 to 130.
All right, go long on 17,700 call option, and otherwise the strategy remains buy on dips. But Rajesh, Bank Nifty has traded better than the benchmark Nifty 50. It's climbed around 532 points above that 41,000 mark. Do you think it's forming a bearish reversal pattern right now?
Yeah, there was a clear bearish reversal on the weekly chart. There is a breakout of falling trend line, and looking at the setup now, Bank Nifty is also comfortably holding 50-day moving average. Short covering was clearly there. Most of the PSU as well as private bank has contributed to this rally. Previous day move was led by Kotak Bank move, but most of the large cap banking stocks from private and PSU both are contributing to this rally, and now most of the stocks from banking space is comfortably trading about to their short-term moving averages. So which clearly adding up the bull case for the Bank Nifty also. And till Bank Nifty is holding 41,000 level, our view is bullish for Bank Nifty for near-term to short-term. Buy on dips should be the strategy for Bank Nifty also. Your stop losses is just below to 41,000. You can place your stop loss at around 40,900. And upside target, we are projecting 41,800 to 42,000.
All right, Rajesh, it's of course all eyes today, and the topic of discussion today would be TCS bunch of IT names out there, although the IT expectations is that, it's going to be a soft quarter. Outlook will be something that we need to watch out for. But how are the charts stacking up right now? And 3 profitable ideas that you can suggest to our viewers right now.
So IT index is still struggling to give any significant recovery as the bellwether TCS is going to deliver its number. So everybody is waiting for all this large cap IT stock to deliver their number. And I think major action will come post numbers only. Even if we go with the data setup for TCS as well as for Infosys, both the stocks are showing very sideways kind of behavior as of now on the derivative front also. Looking at the setup for TCS, we believe 3,300 could act as a major hurdle for the stock, and on the downside 3,100. So it's a very range-bound data setup as of now for TCS. So I think major trigger will come only post number for the price behavior. So I think one should wait for a result season to kick off, and then one can initiate either side trade for most of the large cap IT. My 3 stocks idea at this juncture, that is, one is from automobile space, that is Bajaj Auto, and we believe that looking at the breakout on the Bajaj Auto and the kind of long built-up setup was there, so we believe that Bajaj Auto can scale up further higher towards 4,300. One can keep stop loss of 4,120. Another stock which we like from the metal pack, that is JSW Steel. Most of the metal stocks have shown good buying interest in the previous trading session, and short covering action was there for most of the metal stocks. So we believe that JSW still can be outperformer. 735, 740 could be the target. One can buy with stop loss of 700. And third stock
All right, Rajesh, I'm just gonna hold on to that thought before you give us the third profitable idea out there. But let's quickly address the movers. At least I want to talk about TCS earnings, the preview. Hero Motor Corp is also expected to be in focus. IndusInd Bank. Do keep an eye out on IndusInd Bank because of the possible miss that could come through the MSCI index per se, which can be the stock. And TCS preview, I'll address the preview quickly. TCS has 29% exposure to the banking and financial overall space. It's expected to report 2.1% sequential revenue growth dip when it comes to the rupee terms for this quarter. Net profit, that's expected to increase sequentially, almost a growth out there to an extent of 6%. And the security firms is expected to grow in the range of around 0.1% to 1.1% sequentially. Also, I'd like to address the market opening first. It's an important day today, marks the start of the key earnings season, last quarter of the financial year, which has been completely volatile. And we are looking at a flat to a positive bias opening in for Nifty bias. For Nifty 50, it's an 8th consecutive session of rally out there for Nifty 50, holding around that 17,700 mark. Remains to be seen if it can surpass around that 17,750 levels. Sense some amount of cautious trend. Market participants are expected to be on the sidelines to decide how the flavor of the market is actually, the market breadth is right now stacking up. Bank Nifty index, let's pull that up for you. Bank Nifty index is actually doing well. It's a flat start with somewhat mildly positive bias out there. So do expect the cautious is really setting in right now ahead of the big numbers today. And if we talk about the other sectoral indices per se, something's in the likes of IT and of course something in the likes of auto. Auto is holding up with gains of around more than 0.1% of gains out there. And if you talk about the other sectoral indices, IT down and out. Not really down and out, but I'd say flat with somewhat negative bias coming in for IT sector. Pretty much on the sidelines. I would say metal index holding up for you with gains of around 0.5% out there. And if you talk about the other sectoral indices, something like a pharma index also is holding up with gains of around 0.5% out there. FMCG right now also is participating pretty much sideways trend. Looks like market participants are on the sidelines waiting for the numbers to give the direction to the markets. Infra, nothing much there also. And if you talk about the market breadth overall, realty index down and out, 0.2% of loss coming in for real estate index overall. And if you talk about the market breadth, that remains to be seen, right? Whether it's in the favor of advances or declines for that matter. Advances 35, declines 50. So right now, market breadth still seems to be holding up in the favor of advances. And right, you can see Nifty 50 is holding the neck in green with gains of around 0.1% out there. Let's also address the top gainers and the top losers out there on the list for you. DV's Lab, JSW Steel and Hindalco. Metal Pack has been up and bright on the day when IT is supposed to be the one in focus. And if you talk about the other gainers on the list that we have, something like a Tata Consumer Products, UPL and Cipla are some of the other gainers that we have. Ultratech Cement, Tata Steel, HDFC Banks, these are some of the stocks that have made it to the top gaining list. And if we talk about the losers out there, IndusInd Bank, like I indicated, that's going to be the stock to watch out for. And also if you look at the top losers out there, just to see whether the list has been updated or no. Right now, we are seeing IndusInd Bank to an extent. If you can just pull up IndusInd Bank separately to see the trend overall stacking up. There is a cut which has come in for Eicher Motors, Macquire. Okay, IndusInd Bank, Kotak Mahindra Bank and Nestle India. These are some of the stocks that we have as the top losers. Do remember the fact Kotak Mahindra Bank was one of the top gainers yesterday after the reports came in that it could be possible inclusion for candidate when it comes to the MSCI Standard Index. Today, Power Grid, Bharti Airtel 2 are down and out. HUL, HCL and NTPC is also down and out in trade today. But I'd like to also see how TCS is doing right now just ahead of earnings. It kickstarts the March quarter numbers. All eyes will be on the IT basket. And right now, it's not holding too good. 0.3% of a loss coming in on that one. But there is also a downgrade report which is coming on, Eicher Motors. Macquarie has downgraded Eicher Motors to neutral. The target price has also been cut to 3,258 rupees right now. FY24 and FY25 earnings estimates have been slashed by 12 and 10% respectively. At this point of time, Macquarie says that the stock trades at 24 times based on FY25 estimates, a 16% discount to 10-year average. And this discount is warranted because it kind of reflects the slow earning growth. IndusInd Bank is what I'd like to talk about for a bit before we go back to Rajesh out there. IndusInd Bank, March 2020, the quarterly earnings, March quarter earnings have come, shareholding has come out. The bank has missed out on MSCI Standard Index inclusion by a small margin. Because of this, the shareholding pattern shows FPI room at 14.19%. The requirement for MSCI indexes for the inclusion is 15%. This report is coming in from IIFL Alternative Strategy, Delta Corp, out of the FNO's list, but has reported weak set of numbers. 6.5% growth out there when it talks about the profitability. Profit has been impacted by weak operating performance, but right now the stock has been doing well, holding up with gains of around 0.5% out. Rajesh, I'm going to come back to you and ask you about what do you make out of the opening right now, especially the trend that we're seeing for TCS. Within the IT basket, what do you like, and also what's your third profitable bet right now?
So it's a flat opening as we were expecting some sort of consolidation in first half of the trade, and if we get any chance or any dip towards 17,650 or 680 zone, that is a buying opportunity for the market, as we mentioned that buy on dip kind of market as of now for both the indices. If we talk about most of the IT stocks on the large cap space are still in the consolidation, and we believe that some more consolidation activity is going to happen for most of the IT stocks. But some of the mid cap IT stocks have done well in the recent past and shown a good recovery from their recent low. From that space, we believe that Coforge is one stock where one can look at to go long at the current level also, or if you get any dip towards 4,000 level is a buying opportunity for Coforge, and upside once the stock crosses above 4,100 level, then possibly this stock can scale up higher towards 4,250, even 4,300 level also. So Coforge is looking attractive from mid cap IT pack, but most of the large cap IT stocks are in sideways consolidation mode, and most of the stocks are trading near to their lower band of their recent fall which we have witnessed. TCS, we have initiated one strategy ahead of this result, so one can do short straddle for 3,200 strike. That inflow of premium will come for the short straddle of around 130 rupees. And just to hedge this trade as the TCS is going to deliver, so just to hedge this unlimited risk, one can long 3340 call option, which was closed at around 17 rupees, and one can long 3060 put option, which was at around 13 rupees. So your strategy will remain in profit if stock oscillate in range of 30 to 80 to 3120. This could be the possible range post result. So one can initiate this strategy for TCS. The stock which we like post opening, that is Mahindra and Mahindra, as we already given Bajaj Auto as from the automobile space. We believe some buying interest can continue in automobile space. So Mahindra and Mahindra, one can look at 1203 is the current market price, and upside target we are projecting 1240 to 1250. One can keep a stop loss of 1180, and another stock which we like, that is IEX. IEX is has given a breakout of recent swing high, and looking at the overall setup, we believe that IEX can continue furthermore upside towards 160, 165 zone. So IEX can be buy with stop loss of 146.
All right, Rajesh. Also, I'd like to chat about IndusInd Bank. It's one of the top losers. March quarter shareholding pattern has been updated, and from there it looks like it's a miss for the MSCI Standard Index. The inclusion might not come through because there's a small amount of miss that has come through because of the FPI room. The requirement is 15%, and the stock somehow at this point of time, FPI room suggests 14.15% kind of levels out there. What is the chart indicating right now? Yesterday, Kotak Mahindra Bank was the top gainer. Today is the top loser. IndusInd Bank also today is the top loser. Kotak Mahindra Bank is also piled up to the list. How do you see these two counters right now on the charts?
Yeah, some corrective action in IndusInd Bank, but still we believe that as the sector is in bullish trend, so supply pressure is restricted for IndusInd Bank also, despite of negative news in the opening itself. But we believe that if stock breaks below 1045 level, then some significant supply pressure we can see in the stock prices, and possibly then stock can go down towards 1015 or 1000 level also. But as of now, trend is looks on the positive side. 1040 is your key level to watch for on the IndusInd Bank on the downside. On the other hand, 1100 is the key resistance. If it crosses those levels, then it may continue the recovery trade as we are observing since last 2-3 week in the stock from the recent low. Kotak Bank, after a decent up move in the previous trading session, the stock is now consolidating. For stock, the immediate support area is at around 1820. If it's break those levels, then some more profit taking we can see in the stock towards 1800 also. But as of now, we believe that till 1800 is intact for the stock. There is a high possibility that again stock can start moving upward towards 1865 to 1885.
All right, Rajesh, we'll leave it at that. Thank you so much for taking out the time and speaking to us this morning. All right, that's that part of the show where we address the fundamental picture for you. And today, ahead of the earnings, TCS earnings, we've been joined by Gurmeet Chadha, the managing partner, chief investment officer there at Complete Circle Wealth. Good morning, Gurmeet.
Good morning, Nickey. Always a pleasure.
Well, pleasure is all ours. I'm going to start off exactly with the IT sector because that's where the traction is and is expected to be in spotlight. Do you think at this point of time, with the tier 2 IT companies now at a PE premium of around 21% higher to the tier 1 players, to the big players, there is some amount of discount which has come through 14% on 1st January 2020, that too on elevated earnings. You think with that, the tier 1 information technology stocks are better placed, and also word coming in on TCS?
So, my view is this is going to be a year of differentiation for Indian IT companies. Already been, if you see the first 3 months, we've had, some of the players doing very well. So some people, as you mentioned, mid-cap IT, we had very good performance in ERD space, especially KPIT, adding, continuously adding more labels. Including Renault, Honda. Honda was last month. They did an acquisition. The quarter-on-quarter growth has been stellar, and the stock made a new high before we saw a downgrade in the stock coming in. And then at the same time, we had a lot of mid-cap IT stocks which have corrected 30-40% because they were valued at 60, 70, 80 times, right? And similarly, large cap, we've seen large corrections in spaces where growth has been modest, and and small reasonable corrections. So I think there's a lot of negative news in the price in a lot of spaces. If you see Accenture numbers which came in, they had record deal bookings. While they did reduce the guidance by 100 basis points, it was still better than what Street worked with. So I think in TCS case, I would be looking at the US geography and banks in particular. I think they will probably do dollar growth of 2.5%. The CC growth would be more modest at about 1%. This is anyways Q4 is a seasonally weak quarter with lesser number of working days. But I think you could probably see margin improvement making up for the softness in deal bookings because of supply easing, cost rationalizations, and basis my interaction with some of the CTOs I touch with, the digital and cloud spending hasn't really seen much impact. There's some delay in decision making in the BFSI, but and if you see Nasdaq has already recovered 18-20%. So I think that if you look at Indian IT, probably we are down. So I think a lot of negative news is in the price, and any positive performance, any positive commentary, more importantly, I think should have a favorable impact. Nickey.
Sure, Gurmeet. So I want to understand, do you think at this point of time, with the fears around that, US banking crisis and the impact that it will have overall on the economy, these all things seem to have somewhere factored into the stock price, if not for the earnings. And just like you indicated, that it's the positive commentary which will actually lead to the fillip and probably lead to the recovery for the IT counters in particular. Is that right?
Could be selectively. So, for example, TCS last quarter still had a 600 million pound deal from Phoenix, despite the environment we are in. So we'll have to see how good companies stand out. And that's where I think we've probably seen a beta rally in IT services. I was seeing last 5-year return of BSE IT index. It's 21%, right? That's for the entire index, right? So there'll be some moderation, of course. I think we probably have seen a very high growth of 15-16% for a lot of large IT companies. You'll probably see that moderating to maybe high double digit or maybe high single digit, early double digit. I beg your pardon, and some differentiation coming in. So I think you have to look at two aspects. One, the value. Just don't look at the price correction alone. There are a lot of good large cap IT names which are now 14-15 times earnings. I think the risk reward is good. They're cash rich companies, great return ratios. And in some of the mid-cap IT names, as I said, there's been a good correction, and there is, the growth is still, in some cases, still they can still manage like 4-5% quarter-on-quarter growth. So you got to be a little more selective, and also look at companies which are in niche areas, which is the point. So there are companies in CASE, which is connected autonomous shared electric, which is basically the embedded auto software component. And then, there could be some 5G plays and digital infrastructure plays. So you got to be a little level 2 in your research.
All right. Gurmeet, at this point of time, because TCS, I'm sure you not want to talk specifically about just a counter, but just giving a relative performance out there, just putting things in perspective, right, for the TCS earnings out there. Do you think, is there on any count TCL will manage to outperform larger counterparts in any of the parameters, be it the top line, be it the deal win, be it the commentary, the new CEO coming in, although much is not expected, the strategy isn't expected to really change, but how do you look at these key monitorables?
So, off late, I think Infosys has been bridging the gap. While TCS clearly scores out on margin. I think this quarter also probably you will see 25%. That's where probably you will see some buffer coming in with margins actually shaping up. Also on attrition, I think they've done well considering how huge organization TCS is. And in an environment like this, vendor consolidation, cost optimization is a huge differentiator. Also the ability to manage the supply side pressures would differentiate TCS. And I would be watching, as I said, if the commentary is good and the deal bookings are good, I think you could see some relief. So, but even now at this price, let's say at 3,200 odd, it's not outright cheap because of the run we have seen in IT over the last few years. So I would probably, if you between the two, probably Infosys for me because of valuation comfort. But my view can change if you can differentiate in challenging times like that.
All right, so valuation comfort is the key differentiator here right now. But Gurmeet, also let's shift the focus from IT basket to rate sensitives, because RBI had put in the pause, right? And if interest rates continue to stay where they are, which of the sectors do you think have further room for expansion here on? What is on your list right now?
We are in a classic situation right now. Inflation, we don't know how long it will come down. Growth is also looking a bit of a worry. So I think there are pockets which, if you take a call that rates are probably headed, we probably will have a pause before rates are meaningfully headed lower. That's my personal view. So I think consumer discretionary is something which is in my radar because they were also impacted by high inflation last year. And now, that would reflect in the margin. WPI was sub 4. So you'll probably see better margins in consumer staples and discretionary. That's something we are watching out for. I also think the rural side of the economy will show uptick this year. We have 7 state elections. We have a Rabi crop coming. There'll be a lot of effort being put there. And if you see the actual commentary for March, it does point out to some green shoots. So that makes me a little optimistic. I'm extremely positive on capital goods and utilities. I think that's one space which will benefit from better execution, softer, raw material prices, working capital basis. I think working capital was a bit of a stretch last year. So that should get impacted. And maybe selectively real estate. I think if you especially the higher end, which is the affluent end, record Q3 bookings, Q4 bookings with a lot of players, including TLF here, macro developers in West and few Southwest developers. I think that pocket, despite high mortgage rate, just continues to do well. So building material space maybe and maybe selective real estate.
Gurmeet, I'll also like to chat about capital goods space in specific and also L&T. Most of the preview brokerage reports that have come through suggest that for L&T, this is going to be the best quarter. But if you talk about the stock up move, it seems significant outperformance already. What do you make out of it? What do you expect? Do you expect further upside for this one? How are you expecting the earnings to stack up? And will the earnings reflect that into the stock price? How do you look at it?
So, optically, as you said, their order book is almost 3.9 lakh crores. If you look at the pipeline, that's pretty good. If you, consider their net working capital, the way they manage, despite being a challenging environment, I think they've done a very good job. And the stock has run up. The concern happens is whenever you get into, an election mode, a lot of state elections and next year, there could be some delay in projects which are like energy projects or more hydrocarbon projects. So there could be, so we have to watch out for that. But, as I said, they have a clear strategy by FY25 in terms of they want to get to ROE of 18%, which is the mission Lakshya they have. So I'm pretty constructive. You have to have a view whether we are in a capex cycle or not. I think we are in an early stage of the capex cycle. We'll probably see a much bigger capex cycle once inflation is broadly under control and rates to meaningfully come down. So maybe in the near term, probably you may not see much action because there is an outperformance already. But if you remember 2003 to 7, if the capex cycle plays out, capital goods is a huge outperformer. L&T actually outperformed HDFC and likes of so many others in the 2003 to 7 phase.
Right, that's the word coming in. So it remains to be seen how capital goods actually performs. Of course, all the eyes will be on TCS. But Gurmeet, just on the parting note, any one pick or the sector that you'll leave the viewers with?
See, I personally think, healthcare is one sector which there is a lot of negativity. There's been like a 40-50% price correction. And the pain may not be over. You probably are maybe there could be 1 or 2 quarters more to go. But there are 2 pockets within healthcare which there is a lot of valuation comfort. There is branded generics. India is largely a branded generics market. We have good IPO also coming, which is Mankind Pharma. Hopefully, maybe this month or maybe early next month. Then there's a lot of good correction in the API and CDMO space. Almost like a 50% correction. Some of the larger names like Divi's, Laurus, etc. Even in some of the specialty chemicals names. So I think this is one pocket if you have a slightly longer view and you can take some near-term pain or more time correction, I think the risk reward is pretty favorable.
All right, Gurmeet, we'll leave it at that. Thank you so much for taking out the time and speaking to us this morning.
Thank you. Thank you so much.
All right, with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us link at the bottom of your screen, and do tune in at 11 a.m. with us. We'll discuss all about the IT preview, the TCS expectations, and all of that. For rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.